Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got green on the screen again, and that is with the Dow Jones Industrial Average up by 1.1%. The upper performer for the night at 45,010 points. The S&P 500 is at a new record high after climbing 0.8%. Its 12th record high of the year. And we have the Nasdaq Composite breaking above the 21,000 mark after rising 0.6%. Now let's all break it down with Rodda. He is the Senior Financial Market Analyst at Capital.com. Carl, how are you doing today?
I'm doing great. Thanks for having me.
Always great to have you on the show, Carl. So let's talk about what's playing out right now in the markets. A lot of, I suppose the word to describe it would be optimism right now being baked in with all the deals that have been going on the tariff front. What do you take away from the market action right now?
More or less that the markets have been betting on this taco trade notion, for lack of a better phrase, and that more or less to this point in time they've been proven correct. The deal, or I suppose news of a potential deal between the US and EU would be almost sort of, the final really big deal to be made with one of the US's, biggest trading partners. It would pretty much put us on a path where, if it is at the sort of 15% rate that's being sort of touted in the media, would be more or less around the levels that, markets were pricing in as far as the average level across the United States for tariffs, and would tick off, the likes of Japan. The US and Mexico have obviously got carbs out and working on their own deals, helped along by the USMCA. And then it's also likely that we're going to get this sort of deadline extended for China next week in Sweden as well. And of course, there's already a deal coming together there too. So the markets have been pricing in a lot of good news. Arguably, at different stages, there's been complacency. But what's proven to be the case time and again is that if investors bet on the taco trade, they're proven correct. And once more, it seems that we've got, room to move to the upside with this kind of narrative that deals are, getting done and getting pulled across the line against with the US's major trading partners.
Good news on the trade front. Let's talk about the good news that seems to be coming through on the earnings front. And we've got Alphabet front and center with this earnings out. It looks like they have beaten expectations. So that's a beat on revenue and earnings. And we've got revenue for Alphabet up 14%. That's beating the expectations of Wall Street at that 10.9% mark. Is there also that factor of earnings coming through, so far at least, better than expected, helping to lift markets to new highs?
Absolutely. I think that's probably something that drove the market through April and May in particular that wasn't spoken about enough, obviously, because we were so caught up in the trade war anxiety and, the eventual pauses that were coming through and the speculation about deals and what have you. That if you look at, albeit a narrow subset of stocks, which is, I would say, the Magnificent 7X Tesla, so you could perhaps say the Magnificent 6, is that they're delivering really, really strong profitability. It's becoming clear that they're delivering on this basically AI monetization. So all of this CapEx that we're worried about, perhaps not seeing a sufficient return on, it would appear that these companies are delivering that now. And we haven't, obviously gotten too many details from those big tech companies this quarter just yet. We're still digesting, the Alphabet earnings as we speak. But once more, we've got these companies flagging further capital expenditure, which raises this question about, what's too much and too little. But nevertheless, further capital expenditure on artificial intelligence. And then, also these companies delivering returns to shareholders via, basically buybacks as well, returning cash to shareholders through buybacks as well. So once more, the narrative has been very much captured by this, trade story, and that's fair enough. Traders are sort of wanting to buy into these kind of trade news and this sort of uncertainty that sort of diminishes as we get deals. But underneath it all is a very strong earnings story, albeit with a fairly small subset of stocks tied to that AI trade.
Yeah, all right. Talking about Max 7, not so great is Tesla, which reported a bit of a miss, a 16% decline in revenue as we saw sales drop for a second straight quarter. Then you have, of course, all the drama and politics involved. So Tesla shares are down about 18% for the year, the worst performance among the big mega-cap tech names. And the Nasdaq Composite in comparison up about 9%. What do you take away from what's happening with Tesla right now?
The business is suffering at the top line because of brand damage, and it's suffering on a cost basis or in its margins because of higher costs and higher competition. And when you combine those two things together, one which is a little bit of an own goal, obviously from Musk as he's become increasingly politicized, but then also just the nature of a very, very competitive, EV market, but more broadly speaking, obviously car manufacturing in general is a very competitive market. It's a low margin business. We are seeing that, Tesla's margins are slowly being eroded. Its market share is slowly being eroded. And it would appear Musk's eye off the ball when it comes to business. There's growing concerns that the business can't turn itself around out of this funk and that maybe it's in something of a secular decline. Really telling, I think, that we got that kind of initial boost off the back of the results this morning, just by virtue of margins, the gross margins being just a little bit better than expected. A lot of bad news is clearly priced in. But again, if you look at the revenues, down 12%, BYD, even European EV manufacturers are eating Tesla's lunch. It's just a really bad story for the company right now. It'd be interesting when we get the earnings call, because typically we've seen, a comment about robo-taxis or perhaps, battery manufacturing, or whatever else happens to be. Big promises turn the narrative around. But you just have to wonder how long that'll last. And I mean, the stock's down by about 4% in after hours trading now. It's just a bad story.
Yeah, plenty moving. Tesla stock, at least potentially. One more stock that was in focus last night was IBM. So a bit of a mixed bag here where we have stronger than expected results. They've raised our forecast for the full year. And you have the software business, on the other hand, not doing so well. Part of the commentary stands out for me, which is the CEO flagging that political tensions are prompting a few clients to move cautiously. What do you take away from what's that painting about the outlook and the sentiment around businesses and where things are going for the rest of the economy?
Well, I mean, I think with IBM, it's another one that's less spoken about but still tied up in the artificial intelligence trade, just because so much of their software business is effectively or the growth of which is being driven by, that AI kind of element. I follow IBM a little bit less than I would some of those other stocks, but what I would say is effectively that it's perhaps an example of a situation where, because so much optimism is priced in, and somewhat justifiably, when there are misses on results, like we've seen very marginally on IBM today, investors punish those companies because the bar is set so high. Give you an example. Alphabet's share price pulled back at the initial stages despite the profit beat, 2 or 3% right after the results, simply by virtue of the fact that, we saw a little bit of a pickup in CapEx, and that was a little larger than expected. We had the stock running higher for the last 10 days in a row. A lot of good news was already priced in. We've seen it bounce back. That's another story. But if you look at IBM, basically at a record high as of a couple of weeks ago, investors were pricing in some pretty good news. The stock is richly valued for some of this growth driven by AI. And even though it's still materializing, if it doesn't beat that high bar, again, investors punish it. So the results weren't objectively really that bad. They just weren't really quite as good as markets were expecting. And as a result, you've got this move in IBM today, which, again, it just seems very largely sentiment driven.
A great snapshot of where earnings are right now from Alphabet, IBM, and Tesla. We've been in conversation with Carl Rodda. He is the Senior Financial Market Analyst at Capital.com. Carl, thank you so much for your time and analysis.
Thank you so much.
All right, we'll chat with you next time. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.